Good morning and welcome to the Killik & Co market update. It's been a very turbulent week for markets over in the US. Earlier this week, after a very strong run in the tech sector, the S&P 500 and the Nasdaq Composite both hit new record highs. And in fact, earlier this week, there was a point where Apple, which is now worth over $2 trillion, became worth more than all of the 100 companies in the UK's FTSE 100 index all put together. So that really was quite a sad reflection on the UK's FTSE 100 index, and it really illustrates the lack of technology that we have here in the UK. So we had this strong run in the tech sector early this week, but yesterday there was quite a serious sell-off in the tech sector, with some of the big names losing up to 8% of their value. Now, to be honest, after such a strong run, it's almost welcome to see a correction or a reduction in share prices, because it was becoming very difficult to find decent buying opportunities within the technology sector. And also, it's not surprising to see some investors taking profits at these levels, given the strong run that we've had over the last few months. So let's take a look at the performance of the three main US stock indices over the last 12 months. We've got the Nasdaq Composite, the S&P 500, and the Dow Jones. Now, they're all on this chart, and this chart has been indexed, so it's just showing the percentage changes in these stock indices over the last 12 months. And the orange line shows you the 100% level, or exactly where these indices were exactly 12 months ago. So we can see that all three indices have made positive returns over the last 12 months. The Nasdaq Composite has by far outperformed the other two, and that's because it has a much higher weighting in the technology sector, and that's really helped it to perform well over the last few months. And despite the blip that we had yesterday, the Nasdaq Composite is still showing a gain of over 40% over the last 12 months. Now, in the context of the last 12 months, yesterday's sell-off looks like little more than a blip, but we'll just have to wait and see exactly where the tech sector and the US stock indices go from here. The euro has strengthened against the dollar by almost 10% over the last few months, and officials from the ECB, or the European Central Bank, are starting to voice concerns that this could be bad news for the European economy if the strength in the euro continues. Europe is a very trade-focused economy, and a stronger euro makes European exports look less attractive to overseas buyers. A stronger euro is also bad news for European inflation. Europe already has a problem with low inflation, and the inflation number for Europe is expected to come in at a negative level for the month of August. And if imports become cheaper because the euro is stronger, that will make the inflation figure look even worse. So those are the two reasons why the European Central Bank is starting to get a little bit concerned about the strength in the euro. Why has the euro strengthened? Well, it's more a case of the dollar weakening rather than the euro strengthening. Capital tends to move around the world chasing higher interest rates, and up until earlier this year, the US did have a much higher interest rate than other countries around the world. However, the US has slashed interest rates to try and support its economy throughout this coronavirus crisis, and that has made it less attractive to hold dollars, and that's perhaps one reason why the dollar has weakened in recent months. However, it's not all bad news. A lot of commodities around the world, for example oil, are priced in dollars, so any countries who are net importers of those commodities will be making a saving because the dollar has weakened. And finally this week, India has decided to ban 118 different Chinese apps, including a number of games developed by the Chinese tech giant Tencent. This is good news for Indian developers, and it will also lessen the competition for US tech giants who are trying to break into India. For example, Facebook has recently bought a large stake in Jio Platforms, which is owned by Indian conglomerate Reliance. Adoption of technology in India is relatively low compared to the rest of the world, and it is seen as the next big opportunity for a number of the existing technology giants. Moving on to have a look at next week, it's looking fairly quiet on the corporate calendar, but we have got results out from equipment rental firm Ashtead. That's it from us. Enjoy the weekend, and we'll see you next Friday.